Morning, everybody. My name is Willem Lombard. I'm the Managing Director at Tax Risk Underwriting Managers. Thanks for joining us this morning. We hope we'll give you some useful information, some useful tools. As we all know, SARS is a little bit more aggressive these days than they used to. We see plenty more tax audits, tax disputes, tax problems, and it affects the accounting network and the taxpayer alike. So that's often very traumatic for the taxpayer, and it takes a lot of time and effort and skill from the accountant, from the tax accountant, to help their client to deal with the matter. So hopefully this morning we're going to give you some tools, some tips, and some ways how to deal with it a bit better than what we did in the past, and hopefully we can climb this mountain together. So you won't be listening to me all morning. I'll come in the second half of the session. The session is going to be anything between an hour to an hour and a half. The first half of the session will be taken care of by Skalk Petersen. Skalk is an admitted tax attorney. He's also the Managing Director of Petersen, Sellner and Erasmus TRM Tax Attorneys. His day job is to spend time with SARS and clients in dispute resolutions, often ending up in court procedures. And he's the guy that really has his sleeves rolled up when the hard and tumble arrives at your client's tax doors. So he has loads of experience in dispute resolution, and he's going to talk to us a little bit about his experiences, what we see, and give you some tools onto how to deal with these things. Skalk, if you can switch on your camera, and then Shane, if I can ask you to flip to Skalk's screen, and then there we go. Skalk, thank you.
Thank you, Willem. Thank you so much. Good morning, everyone. It's an absolute pleasure to be here, and I feel very privileged for being invited. Willem, can you guys see my screen?
It's coming up. Yes, perfect. Thanks, Skalk. You can go ahead.
Thank you, guys. So yes, we are TRM tax attorneys. We are a boutique tax law firm. We specialize only in tax matters. I say that purely to put my discussion for today into context, that tax controversy is pretty much what we do on a daily basis. So these tools and these topical issues that I'm sharing with you today are pretty much, they stem from the daily practice, from what we do every day with SARS. We deal with them every day, whether it's litigious, whether it's to settle, but ultimately to work on disputes. So it comes from experience, it comes from the front line, and I'm quite happy to share that with you. We do this on a regular basis, and it's always nice to share the topical developments with other tax practitioners and even with your clients. So what I want to try and talk to today is basically the things that I think are very relevant at the moment. It's Section 9 of the Tax Admin Act. I put it on the screen for you. It's some case law developments around Rule 56. Section 93 applications, which effectively is a request for correction, and some nuances, gradations taking place in practice around that. And then also perhaps something that should be talked about a lot more is, the application of the Constitution when it comes to tax law disputes. So that's pretty much a synopsis of what I want to talk about today. And again, as Willem said, put your questions in the chat box. I'm quite happy to engage. But if you do want to interrupt and you have a pressing question whilst I'm talking, no issue with me. I welcome the discussion as well. Obviously, as a disclaimer, it's not legal advice. You're welcome to engage should you want any advice. And as they said, we will be sharing the slides with you afterwards. So yes, Section 9 applications. I'm going to jump straight into it. Now, these applications are ultimately applications that you bring if a certain decision needs to be challenged, but it can't be a decision made by SARS that is on objection and appeal. Now, the section itself in the Tax Admin Act is quite confusing. you'll see that it refers to a decision that's given effect to in an assessment, right? Or a decision, an assessment that's subject to objection and appeal, which creates the mutually exclusive perception that an assessment that is given effect to or a decision subject to objection and appeal does not fall under Section 9. That's not the case. So what I want you to remember is, in terms of SARS's memorandum and bill, basically, you use Section 9 in cases where a decision needs to be challenged that you can't challenge by way of objection and by way of appeal. Now, this comes in very handy, especially if you're sitting with situations where you can't object anymore, or where your appeal, this whole topical issue about appeals falling outside the 75-day period, and SARS saying we don't have the statutory jurisdiction to allow late filing or condonation, or if you fall outside the 3-year period even, you can no longer object and appeal. But I'm going to list a few examples for you as to when you can use a Section 9. But what I want you to remember, and this is the case law where Section 9 applications have been used, so you can look at that on your own time. What I want you to remember is, if you need to challenge a decision on SARS's part that is not subject to objection and appeal, Section 9 is a very good remedy to use. All right, so let's move over to examples of when we are going to use Section 9. So if you look at the examples listed on your screen, typically in practice, this becomes Section 9 applications become very useful in these scenarios. If you are basically having to reply to an audit letter, right? So they've sent you a notice of audit and they've given you 21 days to respond. You are going to have to collate a myriad of information. Often you can use Section 9 if they decline your request for extension, for that decline to be reconsidered. If you are filing a suspension of payment application, so you haven't yet filed your objection, right? But SARS seem to be taking collection steps. They seem to be moving towards a scenario where they now want to issue a TPA, and they want to take money out of the taxpayer's bank account, and you file a SOP in terms of Section 164. Now remember, if a SOP has been filed in terms of Section 1646, SARS cannot take further collection steps. Even though they sometimes still do, you have remedies at your disposal to get those funds back, because it would be ultra vires, it would be unlawful. So ultimately, if they decline a suspension of payment application, they often do by way of reason that you haven't filed an objection. That's incorrect. Remember, you can file a SOP even if your client or if the taxpayer intends to object. You can still file your SOP. That's what the wording of the section and of the provision says. So if they decline your SOP, use Section 9. File a Section 9, ask that they basically review and reconsider the decision that they took on the SOP that you filed. You might ask what happens after that. If they then decline your Section 9, you've pretty much set it up perfectly for judicial review proceedings. And I'll speak to that in a minute. I know it seems to sound like it's then litigious and court applications and court proceedings. Not necessarily the case. It's certainly a very pragmatic way for you to try and bring your dispute to an expedient resolution. Often when you're in the dispute sphere, in the arena, and you're objecting, you're appealing, you're fighting, you would start talking settlement. Section 144 in the TAA refers to the settlement provisions. And if SARS basically entertain the settlement application under Section 144, it means that they've recognized and allowed for the settlement proceedings to pursue. And if that happens and the decision is not favorable, you can use Section 9 to ask that they reconsider your settlement proposal. A Section 40 notice is a notice to say you have been selected for an audit. Now, if the Section 40 notice refers to information from 2012 to 2024, as we often see, right? An audit. You use a Section 9 request to say, why are you asking for information pertaining to periods that have already prescribed under Section 99? Remember, they can only go 5 years back. If they go further back than 5 years, then they need to give you an underlying causa and reason as to why they are delving into periods that have already prescribed. So you typically use a Section 9 to challenge the residue of the periods that fall outside of the 5-year prescription period. Now, what we also often do with Section 9s in a 46 scenarios, if the 46 request for relevant material pertains to, let's say, to 2020 to 2023. But then when they issue the letter of audit findings, the findings are made in terms of 2018 to 2024. Now remember, your Section 40 audit notice and the pursuant and subsequent audit findings letter must be for the period selected for an audit and verification. They can't select 3 years as a period and then issue letter of audit findings for 5 years. Then the 5-year period had to be part of the notification countenanced in the Section 40 notice. If that happens, you do a Section 9 to ask that those periods that weren't contained in the Section 40 notice be excluded. Typically, of course. A lot of you, well, I don't know, but those of you rather that deal with VDP applications, we have quite a few. We often use Section 9 to challenge certain outcomes on the VDP. They would approve the VDP, but then they would go to the USP table in Section 223 and they would impose a 25% penalty that should be, according to us, a 5 or 10% penalty. Now, typically, you can use Section 9 to challenge that. If you apply for TCS, let's say, for example, your client's non-compliant, but you are currently engaged in a deferral payment arrangement under Section 167. So that DPA is in place. If that DPA is in place and approved, your client is entitled to a TCS, albeit that you have to get it by way of manual override. The fact of the matter, and according to law, the client and the taxpayer should be compliant. If they then render the client non-compliant, you use Section 9 to challenge that non-compliance. So typically examples, obviously there are many other examples that you can use a Section 9 for. Ask yourself, is it something that is currently subject to objection and appeal? And if you can't object or appeal, you certainly can refer to your Section 9. Okay. All right. Let me move on to Section 93. So what I would like to share with you, and it's a cursory share because we can probably spend the whole day on Section 93 alone. Typically, you don't necessarily want to embark upon the whole dispute resolution process. You don't want to do objection, appeal, go through the entire protracted, sometimes expensive dispute process. You should know when to use a Section 93. If there's not a massive dispute on the substantive merits, but it stems from a readily apparent undisputed error, there's an error or mistake made by SARS or error or mistake made by the practitioner or the taxpayer, or even if, for example, you are in a situation where you didn't disclose supporting documentation and therefore they're disallowing the input claim because the proper tax invoices aren't available. Now you typically object to that disallowance and follow the whole dispute resolution process. Section 93 could come to your aid, where you simply ask for a reduced or amended assessment based on the fact that there was a pure omission and you're now ready to disclose those details and you want them to reconsider. We had a matter where, and this is what is very relevant for purposes of this presentation, the 3-year period had already passed, so we can't object and we can't appeal. The client came to us after the 3-year period, right? But it had to do with certain deductions, but the deductions were most definitely allowable deductions. but the information pertaining to those deductions were contained in the financial statements that were disclosed during the 3-year period. So what we did is we went to section 99 2DE. Section 99 deals with prescription. In other words, SARS can't go further back than 3 or 5 years, respectfully, whether it's a self-assessment or SARS assessment. They can't go further back unless they can show there's a material non-disclosure, fraud, or misrepresentation. And the adverse applies in this particular instance. We said, well, we're beyond the 3-year period, but section 99 2D2 specifically caters for us to bring a 93 application beyond the 3-year period if SARS were aware of the error within the 3-year period. So we argued in our case that, listen, you were aware because it was disclosed in the financial statements that formed part of that return. And therefore, we've lifted the prescriptive veil, and therefore you need to consider our section 93 request. So it's a nice tool. It's nice to know that you can do a 93 beyond 3-year period if you can show that the relevant information or empirical data pertaining to your 93 request was before SARS within the 3-year period. Certainly something we're using quite a lot and having a lot of success with. Something you can use to neutralize and sanitize your client's affairs. How to file a reduced assessment? You don't have to do it by way. SARS respectfully sometimes come back and say you're supposed to file an objection and appeal. You can't file a 93. It's incorrect. The Rampersad case specifically said, despite any objection or appeal, taxpayers' remedies and rights are to file a 93 application. I'm sorry if I'm going a bit quick. I just want to make sure we are within time. So yeah, that's typically how you would file it. And I did list the sections, and I also listed what would typically constitute readily apparent and undisputed error. And then just remember the case law in respect of section 9. You can work through that on your own time. It's quite self-explanatory, but it is also there. We won't have time to work through that in detail, even though I would love to. All right, other than 93s, I want to chat to you quickly about audit delays. Probably a very topical issue, isn't it? And all I really want to do here is to bring this case to your attention. This is a very recent case, Kusasa. It's August 2023. And this case would serve as authority in your correspondence with SARS if the audits are taking too long. You cite this case and you tell them, in terms of this case, you're now beyond the 3-month period. You're taking very long with the audit. You need to finalize the audit, otherwise we're going to exercise our rights. And we do that with reference to authorities like the Kusasa case. In that case, the court said this audit is being delayed unnecessarily. You are infringing on the rights of taxpayers in terms of constitution. You need to urgently deal and finalize this audit. Otherwise, you'd be in contempt of court. Very useful tool to expedite audits, certainly. Now, that brings me to perhaps something I'm very passionate about, and the Constitution, and how the Constitution is fused with what you do every day and how you can use it from a practical point of view. So you guys use, our clients use, practitioners use, accountants, auditors use the substantive law on a daily basis. We use the Income Tax Act, the ETI Act, we use the Customs Act, the VAT Act, and we use all of these acts for purposes of administering the tax. In the South African Revenue Services Act, in Section 4.2 in particular, I'm not going to open up the sections. It's legal polemic. I'm going to bore you with that. You're more than welcome to go and refer to those sections. I'll tell you in a paraphrased way, bottom line, what the sections and these provisions hold. Now, Section 4.2 of the South African Revenue Services Act specifically says that SARS need to act in accordance with Section 195 of the Constitution. They need to comply with Section 195 whilst administering all the other tax statutes, being the VAT Act and ITA, the substantive provisions that they use to impose tax. They also need to comply with Section 33 of the Constitution. So Section 195 of the Constitution has a list of things that they then need to do, and amongst others, it's to act in an efficient manner, it's to act in a manner that's not biased, it's to act in a manner that is professional, it's to act in a transparent manner, something that actually is surfacing in case law, meaning they need to give you reasons to their decisions, they need to give you the documentation that they used in the decision-making process, they need to be professional. Section 237 of the Constitution says they must act without delay. Now, this is not academic. It's not that you can't enforce these provisions. This is a constitutional statutory obligation, a mandatory obligation that if SARS failed to comply with, you have rights in terms of the taxpayer that you can exercise, because the Constitution, in terms of Section 1C and Section 2, is the supreme law of our country. As soon as SARS act contrary to the constitutional obligations, you should use that to amplify, augment, and supplement your dispute. Remember, guys, your Section 11A provisions that you raise, your Section Paragraph 80 provisions, your flow-through principles, your Section 24C allowances. I'm just trying to mention a few substantive law examples pertaining to disputes. Those substantive merits, those are the merits of your matter. But your constitutional merits and your procedural merits and your administrative law merits are just as strong and just as important as your substantive merits. Often, let me give you an example. The case of Mr. A versus the Commissioner. It's a case where we acted for the taxpayer, was a reported judgment where the court said SARS's failure to follow a procedure, being the failure to issue a letter of audit findings under Section 42, is a mandatory provision, and non-compliance offends the Constitution, and on that basis the whole assessment is invalidated. They didn't even go into the substantive merits of the case. There are a lot of cases I can mention as an example. I mentioned that one because it's quite a simplified example that falls squarely within what I'm trying to tell you. Now, if you are dealing then with your Section 33, just before I move on, says SARS must always act in a reasonable manner, in a procedurally fair manner, and in a lawful manner, and they must always give adequate reasons. Again, a constitutional obligation. So, great, Skulk, wonderful. Thank you for the theory and the academics, but how do we use this in practice? Well, let me tell you. You are going to deal with objections. You are going to deal with your appeals. If I'm looking up, it's because the presentation's on the screen above me. Section 9 that I've just explicated to you. Section 11 notices is when you place SARS on terms from a legal point of view. Rule 56, default judgment applications. You guys are well aware that if SARS failed to comply with any of the rules, you can bring an application for default judgment and dispose of the matter right there and then. If you're filing a complaint with the Office of the Commissioner or the Ombud, if you're doing a mandamus, a declarative, that's more legal. If you are doing a request for correction, if you are filing a Section 95 notice, any documents that you deal with on a daily basis with SARS, and when making out your substantive argument, in that same document, you raise the fact that you, SARS, are supposed to comply with Section 33 of the Constitution. Make it a Part B of your document. You remind them that they're supposed to comply with Section 237 of the Constitution, act diligently and without delay. You remind them that they need to act in accordance with Section 33, specifically mandating them to provide adequate reasons. You remind them that Section 195 says you have to be transparent. You have to be effective. You have to use your resources efficiently. You have to be professional. If you're not, it's not a matter of unprofessional conduct that now falls subject to a complaint. It's a matter of conduct that is unconstitutional. And if it's unconstitutional, that is a ground to invalidate the assessment, the actual assessment that is based on tax charging provisions. And that's how you use the Constitution and administrative justice and administrative law provisions and procedural provisions to supplement your exchange and your correspondence with SARS. So I feel practitioners need to be more alive to this. Yes, as attorneys, we use this often. We often get assessments invalidated, but it's something that doesn't have to be reserved purely for legal practitioners to use. You should be well aware of the taxpayer's rights, and you should use that in your representations. All right. This is just that. I think that's pretty much it for me. I just want to mention to you guys that a lot of what we do, we also present on ITF with some courses. Our details, if you need them, will be on this QR code. So if you scan that QR code, it'll take you to our website. All our details are there. I've included a dispute resolution QR code. So if you scan that code, it'll take you to a whole diagram of how the dispute resolution process works. I think that could help a lot. You can save that and you have it on your screen printed out, and then you know exactly how the process works when you are filing and running a dispute. This is only half of it. I see the screen cut it off. I also want to mention to you guys that you are welcome to engage with us at no cost. Should you ever have inquiries, we do prognoses before we interfere and manage to see if and how we can assist. But more importantly, if you want us to speak to these topics in more detail, at no cost, we love giving presentations to your firm, to your company. Reach out to us. We'll arrange something, if not in person, then online or through Teams. We love presenting and sharing our knowledge. I think all practitioners should do that so that we are a united front when we are fighting for taxpayers' rights. So please feel free to reach out and we can arrange something for you personally, for your company, for your partners, if need be. I think that pretty much is it for me, Willem, which puts me right on 30 minutes. Let me check. Excellent. Thank you so much. Thank you, Shane. Thank you, Willem, guys, for giving me the opportunity. I'm very passionate about what I do, what we do, and I love these seminars and presentations. So it was really an honor, and I appreciate it. Thanks, guys.
Thank you for your time, Skalk. Skalk's still going to be with us for a while. If you have any questions to Skalk, you're more than welcome to type it in the text box, or you can unmute yourself and ask the questions live. It's quite informative to ask the questions and get the answers immediately for the rest of the panelists also. So by all means, if you have any questions, just let us know. Also, after the session, you can email us. I'll give you some email information where you can direct your emails. And as we said in the beginning of the session, the presentations will be made available to you. So I know there was a lot of technical detail in there, so you'll have the opportunity to have a look at that at any given time. Right, just to introduce myself again, my name is Willem Lombard. I'm the Managing Director of Tax Risk Underwriting Managers. So Skalk's giving you a lot of information about your rights, the privileges, how you access these dispute resolution tools, but it remains a very complicated and a very complex area, this dispute resolution and the remedies associated with it. So my half of the presentation, I'm going to tell you a little bit about tax risk insurance, what we do, and effectively it gives you access to these tools on a very affordable manner by buying it through an insurance policy, right? So I'm going to give you a background, a quick overview of how it works. But the fundamental principle is that you as the tax practitioner or you as the taxpayer through an insurance policy will have access to these particular skills, which, as you can see from Skalk's presentation, is very important, first of all, because you have rights and privileges, but it's also very difficult to access if you don't know how. Right, so Shane, just let me know if this screen has flipped over. I think it has, so I think we should be okay. So this first slide that I show you is going to give you a bottom line of what tax risk insurance does, right? So it's effective insurance against SARS audits and related disputes. If an individual, business, or trust, so we can immediately see it's aimed at the individual as a taxpayer, a business, and a trust specifically, is selected for audit by SARS, or if there's a dispute about a tax reassessment in terms of which SARS is demanding additional taxes from the taxpayer, then tax risk insurance will appoint and pay for the team of tax professionals to deal with the matter. And this ensures a fair and favorable tax audit and dispute outcome. And when we say fair and favorable tax audit and dispute outcome, we understand that the balance of power is not equal, right? We have SARS that employs more chartered accountants than anybody else in South Africa. It's a big, massive machine. They have the Tax Administration Act at their disposal and all other legal privileges, where the average taxpayer, the small to medium enterprise, and the individual has none of that, right? So you're in business to conduct business. You're in business to make a success of the business. You have very competent tax accountants that look after your tax affairs, but every now and again a tax audit happens or a dispute happens around an unfair tax reassessment, and that requires you to fight back. And that requires you to fight back in a skilled manner. Otherwise, it will end up in a disaster. And in a skilled manner is pretty much the summary that Scott's given us in the earlier presentation. To summarize the issue, I'm going to show you a short video clip. Right, so that gives you an idea of what we do. This is our target market. These are the people who we are able to provide the best levels of service, right? So small to medium companies. And why the small to medium companies is, first of all, they make up the majority of companies, taxpayers in South Africa, and also they are most exposed, right? So these are typically the companies that do not have access to these very specific skilled resources to put up a decent fight against SARS when there's a problem. So the insurance policy provides that, of course. Then the owners, shareholders, and directors of these companies. So we protect the company, and then we'll also like to protect the shareholders and the individuals that own those companies or that sit around those companies, because often your tax affairs are closely married to that of your company. High net worth individuals. Why high net worth individuals? Is because SARS tells us that they are targets for audits, and we understand that they are under the microscope of SARS. Every year SARS issues their annual report, and then also their 5-year plan. If you ever suffer from insomnia, you can go onto their website and download those reports. It's very detailed, but it does tell you exactly where SARS intends to focus their efforts. And one of the areas that's been on the horizon for a while is trusts. So your trusts are also exposed because SARS believe that some trusts are built to circumvent paying taxes. We also know and understand that many trusts are not structured properly in terms of what the trust legislation requires. So we see in our office a lot of these claims coming through with SARS is in fact attacking these trusts for the structure and for the tax compliance of it. So what's covered? So we cover virtually all local taxes. I say virtually all local taxes. There are particular taxes that we don't cover. We'll get into that detail now, but it includes your income tax, VAT disputes, employment tax, that's pay as you earn, of course, capital gains tax, and the policy will then also pay for services if it needs to go to appeal or to the tax board or even into a tax court if that is required to take SARS to task in a court of law. Right, the benefits just very quickly. So it's affordable monthly premium. So we ask a pool of insurance people to buy the product and pay in a small amount of monthly premiums into an insurance pot, right? That's the basic principles of insurance. And then when there's a problem with any one of these people in the insurance pot, then there's money available to appoint these external service providers, tax accountants, tax lawyers, to deal with the matter. And everybody always asks me, what's the price of these policies? We'll get to the specific pricing shortly. So it's the risk cover in the event of a tax audit for individuals and companies. We've spoken about it already. And of course, trusts is covered by that. We have access to some of South Africa's top tax specialists, right? So that's very important. The people that we use in defense of our clients is not people that work for our business. They are not salaried employees. Our tax specialists, like Skulk, at his practice, are in private practice. These are people who deal with these matters on a daily basis. They have the required skills and expertise, and it's important for us that we get people in private practice because that's the level of expertise that we would like to bring to our clients. It removes the uncertainty of an unexpected SARS tax audit or related dispute. Right? Mostly tax risk insurance is still a very new concept to most people, and most people at the moment are self-insuring. Right? You have your accountant if you're a taxpayer, and if there's a problem that arises and it requires you to buy these resources, it comes out of your own pocket. Right, so if it requires a tax attorney, or if it requires additional hours from your existing accountant, or if you need to buy in additional expertise, it comes out of your own pocket. And that's, generally speaking, an unbudgeted item. I don't know of a single company or individual that puts money aside in their income statement or balance sheet in the event of a tax audit dispute. So when this happens, it's always a surprise. It's an insurable event. It's a surprise. You did not expect this to happen to you. We see this in our claims office every day, is when SARS attacks our clients and we get this information in from our clients. We always know that it's going to be a surprise. Why is this happening to me? Right? So what the policy does is remove some of that uncertainty. You are now able to ensure that uncertain event of a tax audit or dispute, and when it happens to you, you have access, as we've now discussed. It covers the cost of your own accountant's time, experience, and expertise. So for the BAN accountants that's on this call this morning, it also covers your cost, right? So you are able then to provide your clients with a full host of services as required, and you get paid for your time and money for the duration of the claim. It is our habit to appoint our clients' own accountants as the lead in the defense, and then bring in the outside expertise should that be required. Depends on the complication, and that strengthens your hand, right? So you are able to then provide a full house service to your clients at a fraction of what it normally would cost, and you can charge your time back to the insurance policy. And then also it ensures the fair treatment of audit outcomes. We've spoken about that already. There are some exclusions. As I said earlier, we include almost all local taxes. There are specific exclusions that we don't cover. The first one is audits and disputes, which will commence prior to the inception of the policy. So effectively what that means, if you take out the cover today, but you're already in a dispute with SARS, right? There's already a problem on the go. We won't cover that issue. You can't have the car accident and then buy the insurance policy under normal circumstances. However, the cover is retrospective. That's very important, right? So if you buy the policy today, and next week SARS comes to you and writes you a letter and says you are being audited for the last 3 years VAT statements, you are on cover, right? So even though because audits by their definition are retrospective, SARS looks backwards all the time. You buy a policy today, SARS comes at you tomorrow in lieu of tax returns of the last 5 years, you are covered in terms of the policy. In fact, you are covered in terms of the policy as far back as SARS goes. Obviously, as SARS, as Skalk mentioned in his presentation, legitimately SARS can only go back 5 years. And if they go back further than 5 years, then we will ask the question, why would that be? Right. So secondly, matters where fraud and crime is involved. That's fairly straightforward. No insurance policy covers fraud and crime. In the tax definition, of course, that's tax evasion. So your willful evasion of paying taxes will not be covered under the policy. Tax planning, tax avoidance is, of course, a legitimate mechanism. It's to pay only the minimum amount of taxes that you have to pay, but it's still legitimately the minimum amount of taxes. That's fine. That's covered in terms of the policy. But as soon as anybody steps over the line and commits fraud, the policy won't cover. We've never had a case like that. People who buy our type of insurance policy is not in a game of willfully defrauding SARS. The two doesn't come together. But that's for the record. We don't cover tax fraud. Audits as a result of late submission of tax returns without an extension. That's a fairly straightforward one. So if you're being audited or there's a dispute because you've submitted your taxes late, your policy will not operate. You must still submit your taxes on time as you would normally do, right? Then matters relating to income generated outside of South Africa. So that's got to do with everything to do with transfer pricing. If you conduct business in the UK and your taxes are payable to your Majesty's Customs and Excise, it's not covered. So we cover South African taxes only. Anything to do with cross-border transactions are not covered. We also understand that some individuals, especially lately in the South African context, do consulting work outside of South Africa. For example, if you're an IT specialist, you can do work in South Africa, but you also have a client in the UK where you bill him, but you bill him in South Africa and he's paid from the UK, but it's still taxes payable to the South African Revenue Service, right? So if that's your case, then you just have a conversation with us, and then we can make a particular entry into your policy to cover that sort of thing. So that normal income generated outside of South Africa is covered. Generally speaking, transfer pricing, cross-border transactions not covered under the policy. Okay. So costs associated with the normal preparation of your tax return and supply of routine supporting information. So you must still submit your taxes as normal. Your policy does not replace your accountant. Your accountant helps you with your tax return, submitting it, and that includes if SARS does a verification. So if SARS asks you to send copies of balance sheet, income statement, invoices, etc., etc., it's not covered under the policy. That's part of your normal tax obligations, right? It's to submit your taxes, and if SARS asks you for routine supporting information, copy, paste, send. It's what comes after that when your policy enters. When SARS has finished with the routine request for information, and all of a sudden you get this demand for additional taxes, a reassessment, and you go, hang on, this can't be right. That's when your policy starts operating. Specifically excluded is matters relating to customs and excise control legislation. We specifically exclude customs and excise matters. And the last bullet point also, we specifically include employment tax incentives. So as I said, we cover most local taxes. These are the two local taxes that we specifically do not cover. It's customs and excise matters and employment tax incentive matters. We can't underwrite that profitably. I'll answer some questions on individual cases. If you want the cover, you can have a chat with me and we can talk about it. And then also importantly, the second to last bullet point there is that the actual taxes, interest, penalties, and fines imposed by SARS. So if there was in fact an underpayment of taxes due to an error or a misinterpretation, whatever the case might be, you are still responsible to pay your back taxes, including the interest and penalties and fines legitimately imposed by SARS. So it's important to understand legitimately. So in the final analysis, we must be happy that this is actually a legitimate transaction. You do owe the taxes, you do owe the interest, fines, and penalties. But as part of the service also, we will negotiate with SARS to get some of these waived, which we're sometimes successful with, especially if you're first-time offender. It's an honest mistake. We have seen that that sometimes SARS does adhere to requests to waive interest, penalties, and fines in certain circumstances. So that's part of the service. Right, here's some examples. I'll give you a case study of it goes back a couple of years, but it's a typical example. And why it is a typical example? This is a small to medium-sized enterprise. It's a company with around 15 million rand turnover per annum, so not large. They employ just under 10 people. They generate sales. They're based out in the northern suburb of Johannesburg, and they received this reassessment from SARS, where SARS is demanding 604,000 rand additional taxes from the taxpayer. They don't know why. They have a very good tax accountant. We have a relationship with this tax accountant. We know they're skilled, so they were not informed. There was no letter of findings on file why SARS would owe them 604,000. And once you get into these procedural matters, as Schalk mentioned in his presentation, it almost becomes unimportant what the quantum is, what the math is, what the actual accounting principles are, because if SARS has not issued a letter of findings, then it deems that this reassessment is automatically unfair. So we did attack it through some tax lawyers. This is the letters. There were a few others, just to give you some background in it. And it took a few months to get this matters resolved. This is the outcome from SARS. It basically says the South African Revenue Service has considered your notice of objection dated, there's the date. Your objection against the 2018 tax period has been allowed. All right, so there's no fireworks. There's no attempt to understand where these numbers come from. Of course, in this particular case, there's a lot of background detail that I'm not discussing at the moment. But there's no apology from SARS, no understanding why they have issued this reassessment. Just a simple one-liner that says your objection has been allowed, and the client then received this following assessment where SARS now actually owes her 599,000. So a very good outcome for our client. This is typically what we expect to see if there's a legitimate case to be had under the policy. The client's very happy. This was a very stressful time for the client. A 600,000 Rand additional tax bill would put this client into insolvency, right? It's a small business. Into insolvency means 10 people are without a job, right? So it's a very traumatic experience for the client, and we were very happy that we'd be able to help the client in this matter. But it's not always small. This is a current matter. Will make your eyes water. This is the amount for 12.7 million Rand from SARS for one of our larger clients, and the matter is still pending. But it just gives you an idea that it's not only the small clients, but also large clients that gets attacked. All right, so more about the policy itself. How much does it cost? What does it cover? We call it our classic range of products. So how you apply for it is a simple 2-page application form. This is what it looks like. Front page is where you submit your details. And the second page is some questions. We really try to understand what your current tax situation is by these 7 simple questions. And then the table at the bottom gives you your premiums, right? What you expect to pay. So I'm just zooming in on that part. So if you're a small company, so you have a less than 3 million Rand turnover, your premium is 249 Rand a month. So on the application form, if that's your annual turnover from your last financial statement, you tick that box. That's the premium you pay. If you're a larger organization, your turnover is between 50 million and 100 million Rand, as you can see at that level, you tick that box, and then your premium is 1,449 Rand a month. Right? If your turnover is more than 100 million Rand, you just simply enter your turnover in that box there. Still send us the application form, and we'll ask a few more questions about your business because these are now larger risk. As I said earlier, our product is aimed at the small to medium enterprises because these are the people that can best benefit from the services that we offer. Here's the indemnity limits, right? So the limits that the policy will pay. Again, if you're a small company, your annual aggregate limit is 250,000 Rand per year or 50 hours. So let me explain to you a bit what that means. So the 250,000 Rand is the amount that we will spend on the tax attorneys or the tax accountants to deal with these matters, right? That's the hourly charge, or the 50 hours, whichever is the lesser. And the reason why we have these 2 indemnity limit ceilings is that not all accountants and attorneys charges the same hourly rate. Right, clearly we negotiate with our service providers to make sure we get a decent hourly rate. But if you're a Santon tax attorney, your hourly rate will be a lot more expensive than if you're a Pofadder tax practitioner sitting in the outlying areas. So that's why we have these double indemnity limits to make sure we deal with both. These indemnity limits have been set very high. If you're a larger organization, you have 1 million Rands worth of cover or 300 hours, whichever is the lesser, right? So that you can see there's a lot of money involved if the larger companies, lesser for the smaller companies. And then each claim is limited to 100 hours per any one claim. So what that effectively means is for these large organizations, we have 300 hours. It's limited to 100 hours any one claim. So you can have 3 claims in a year or 5 or 6 claims, as long as in aggregate in the year it doesn't exceed these amounts. So 300 hours. So SARS can come in and do an income tax audit, and then later on in the year there's a VAT dispute. All of those were covered. So it doesn't matter if you claimed once that you have now your policy will be cancelled. You have cover for more than 1 claim during the course of the year. Importantly, each taxpayer must have his, her, or its own policy. So if you're a company, but there's 2 or 3 companies, maybe a holding company and 2 shareholders sitting around those businesses, and you want them all covered, then you buy a tax risk insurance policy for each one of those entities, for the operating company, holding company, and for the individual companies. There's an excess under the policy, which is 10% of the claim with a minimum of 1,500 Rand. So that's the first amount that you pay. It's 10% of the claim, minimum 1,000 Rand. Here's the premiums for individuals. So we've just looked at the companies. Here's for individuals. With individuals, we look at your taxable income during the last tax year. So if you earn less than 2 million Rand a year, your premium is 235 Rand a month. If you earn between 2 and 5 million Rand a year, your premium is 335 Rand a month. And if you earn more than 5 million Rand a year, if you're fortunate enough, then you enter that in there, and we'll do some special underwriting and pricing for you. And there's the indemnity limits. It's for less than 2 million Rand, it's 100,000 Rand or 50 hours. for more than 2 million rand is 300,000 rand or 100 hours annual indemnity limit. For trusts, if you want to cover your trust, there are two types of trust in our definition. One is what we call a trading trust, and one is called a passive holding trust. Now, a trading trust is used as similar to a business, so it operates as a business. There's turnover, there's expenses, there's income, etc., etc. And as you can see here on the application form, we rate it similarly to companies. So we look at the turnover of that in that trust, and then you select your tick box, and it provides you with your cover. If it's a passive holding trust, a passive holding trust, generally speaking, is where your assets are held for protection for future generations. So generally speaking, it can be property that's in there, or shareholdings, or investments that sits in there. It doesn't actually trade. There will be transactions going through this, so you might earn dividends, there might be bank fees being paid, there might be disbursements to beneficiaries coming out of there, but it does not operate as a business. It's a passive holding trust. And for that, irrespective of the size of the trust, it's 275 Rand a month. And there's the annual premium. At the bottom here is the indemnity limits, 250,000 Rand or 50 hours for the trading trust, and for passive holding trust, 250,000 or 100 hours. All these items, because I'm rushing through it in lieu of time, will be on the application form. I'll tell you now how you can get hold of the application form. Before we get there, this is the role players in my business. First of all, Bright is the insurance company that underwrites it. So as far as the solvency, the security is concerned, Bright, all premiums goes into the Bright bank account, and all claims come out of Bright. So Bright's the license on behalf of what we underwrite. Tax risk is my business. We are an underwriting manager in the insurance definition. We don't actually sell insurance, so you can't buy from me directly. We underwrite, we determine premiums, we pay the claims on behalf of Bright, etc., etc. Our products are sold through a network of national insurance brokers, right? So you can go to your local insurance broker. If he's accredited with us, if he's applied to us, you can buy the insurance product from your local insurance broker, and he'll be able to give you advice if you need advice. But I suspect your accounting practice will be able to give you a lot better advice. You can also, as this is one of our brokers, if you want to go online, you can go to www.gsfin.co.za. GSFin was previously known as Great Soft Financial Services. They recently changed their name. You can go on there, you can download all the forms from there. You can get all the information, terms and conditions, all the stuff that we've spoken about this morning will be on their website. So you can buy it from GS Financial Services, but probably a better idea is you can buy it from BAN's own website. So BAN has access to, as a portal of this GS Financial Services. So you go into the BAN website, you go to the services page, down on the page, and there's a section called tax risk insurance. And you can click on this yellow button here that says go to Great Soft Portal. It will take you to here. As you can see, there's the GS Financial Services logo here, and you will buy online. All right, so you can buy your policy online by filling in, you select if you're a company, an individual, or a trust, and you put all the information in there, and it'll take you through the screens, and you can buy your cover from here. Or alternatively, you can give me a shout here at info@taxrisk.co.za, and there's my email address and my telephone number. Right, as I said, the most important thing is for this morning's presentation is that we understand that taxpayers are more exposed than ever before than running into difficulty with SARS. You have rights and privileges protected by law, if it's the Tax Administration Act or the constitutionalities that sits around that. You do have access to remedies to protect yourself if SARS comes after you with a reassessment. But it is a particular skill that to deal with it. Skalk earlier this morning tried to give you some pointers, give you some background as the tax practitioner, how you can access these things, what you need to look out for. But it remains a complex area. We understand that just being a tax practitioner is a complex work in its own right. To deal with disputes on top of it is a massive, massive issue. We see that every day in our claims office, where we get the phone call from either a taxpayer or the tax practitioner with a particular problem. If they received this reassessment from SARS, they don't understand where it's coming from. So the remedies are very important for you to protect yourself or your client against these audits and dispute, and you can access this simply by buying insurance, right? So that's That's the purpose of this matter. Right, I'm finished with my presentation, and we've left a lot of time for questions. If there are any questions, you are more than welcome to provide us or unmute yourself or type us in the box.
It's Monique here. Lovely to see you again, and thank you for an awesome presentation, both Willem and Skalk. That was really very extensive, and I think you've opened up a lot of eyes to our tax practitioners with regards to the follow-through. They do have a lot of issues with objections and appeals. Just one quick question, Skalk, you mentioned Section 9, I would imagine, of the Tax and Admin Act. Is it not, are you not actually referring to Chapter 9 rather than Section 9? Just to clarify.
Yeah, no problem, no problem. So basically, Chapter 9 encapsulates the dispute resolution process. And if you go to Chapter 9 and you then go to the regulations of the Tax Admin Act, you will also in the regulations find the rules that regulate the dispute resolution process. But Section 9 of the actual Tax Admin Act is a remedy on its own, which is actually, it's good you asked the question, Monique, because it's actually when you use Section 9 is when you can't use Chapter 9. So it's good you asked that. So no, it is Section 9, and it's specifically available when Chapter 9 finds itself negated for purposes of the remedy you wish to invoke.
Okay, thank you very much. Are you referring to the rules under Tax Admin Act Section 9 or the actual Act itself under Section 9?
Yeah, the actual Act itself.
Okay, because that's decision or notice by SARS, is that correct?
That's the one, yeah.
Okay, thank you very much for that clarification.
No problem.
Hi, I've got a quick question. I've got a client that was recently audited. In fact, I think it's still ongoing. And they were being audited on their income tax return, and SARS asked for the fixed asset register, which was sent through, and the fixed asset register had assets listed from previous years. You know, the asset registers ran from the beginning of time basically to now, and SARS has queried assets from a prior year. But what you were saying in your presentation is that they actually can't do that. They can only deal with the assets or the query under their scope. But I don't think that the accounting firm that was dealing with that is aware of that. That's correct? Did I understand what you were saying correctly?
Yes, pretty much. So was that under the auspices of an audit or a verification?
So it was a verification of the 2021 tax return, which was very late in coming, and the tax return, and they wanted to confirm, I think, the depreciation and the tax calculation of that. And so, in one of their questions, they asked for the asset register, but the asset register had like an opening balance amount on it that related to, I'm not joking, must be maybe 10 years ago or something. And they asked for the breakdown of that opening balance amount, even though all the amounts were fully depreciated.
So Lindy, strictly speaking, theoretically, they need to, if they're asking questions and requesting relevant material they've done that under Section 46(5). For periods not forming part of the scope of the verification, they need to issue a new Section 40 notice. So yes, you can challenge that with a Section 9 saying your request for this information needs to be ring-fenced under separate proceedings by way of Section 40. Number two, if they're asking for information, and I don't mean to regurgitate sections here, but if they're asking for info under 46(5), they also need to ask for info that is foreseeably relevant. That word is specifically contained in the section. So ask yourself, is this foreseeably relevant? Will this help with my dispute, giving them the information, expedite and bring some pragmatic progress to the outcome, in which event it would be futile, I guess, and perhaps counterintuitive to not give the info. Whereas if giving the info is going to open up a brand new can of worms, I'm not saying that the taxpayer is hiding anything, but is going to prompt an entire new audit, you can challenge it by way of Section 9 and tell them, on what basis must I give you this? You failed to give me foreseeable relevance, and you failed to issue Section 40. So quite frankly, you're acting outside the scope of your mandate. Now, there's a distinction between verification and audit. When SARS audit, they have to, well, apparently there's a distinction. I don't agree. If SARS audit you, then they have to follow Section 40, 42 processes. If they verify, then they don't have to follow those processes. But there's case law, recent case law, to say as soon as they're asking for info outside of what you submitted in your return, they are effectively conducting an audit. In fact, that's on their own version in those court papers. But a very contentious debate at the moment. I would deal with it in that manner. Be practical, not only legal. Ask yourself, would it be progressive to my case and an outcome in giving them the info, or is this they don't need it? It's entirely outside the scope, in which event you challenge it with a Section 9.
Well, yes, and the client is very compliant and very happy. But in these past years, they had a accounting person that wasn't very good, for example. So they had trouble locating the asset register that had the opening. It took a lot of hours to go through their records to find it. But there's also a sense of, well, if you push back at SARS and say, this, how is this relevant and whatever, do they not view it as you've got something to hide? And then, because obviously from the client's point of view, they're like, no, we just spent days hunting for stuff that's 10 years old, as opposed to going, no, it's outside the scope. But in this case that I'm talking about, I'm not the tax practitioner, but they just contacted me, but their accounting firm obviously asked us to go hunt for the information and didn't push back. But do you think SARS sees the pushback as maybe they're hiding something, or do you think it's okay or you ask it in a very respectful way?
Yes, so I usually say it's from the outset, it is not our intention to be non-compliant, and we give you complete undertaking to comply with your request for relevant material, but only insofar as it falls within, and I'm now again going to mention a section, I'm sorry, this is my daily dialogue, as far as it falls within Section 3.2, which is the section that regulates the powers that they have to act within. So, and then you tell them, so I'm not going to comply with unlawful requests. My taxpayer also has rights. But in my experience, Lindy, pushing back is what often causes them to be more respectful of the procedure they're about to follow and be more respectful of the taxpayer's rights, which often leads to a truncated outcome, truncated additional assessment, because they know, well, had I taken a chance to go there and there and there, these oaks are going to push back. So let me rather just, and I don't mean it in a condescending manner, but they sometimes do, issue additional assessments based on very questionable grounds, because they have those targets to meet. So pushback, in my experience, brings about a more focused result. There are millions of taxpayers and millions of exchanges. You a needle in a haystack. Don't think you're so important that they're now going to put a target on your back. They just don't. That's not how it works. So I'd push back, but ask yourself what the ultimate outcome is. Again, we try and find a balance. To be overly legal about it at the expense of a practical outcome doesn't make sense. You don't want to typically incur legal costs if there's a more pragmatic way of doing things. So I guess it sounds like they're venturing into a capital gains, wanting to raise some CGT there, if I'm listening correctly. But then they need to conduct a new audit, and when they do, you would have a set of remedies at your disposal.
Yes, yes. Okay, no, that's good. That's helpful. Thank you very much.
Sure. Anytime, Lindy.
Just for the sake of everybody else, based on Lindy's question and whereby you ask whether it was an audit or verification, when does the difference between an audit versus a verification become relevant and the impact on the actions needed to be taken by a taxpayer? Now, I know this is of a particular interest to Skalk. There's a line between verification and audit. So Skalk,
Thank you, Willem. Thank you for the hospital pass. I'm joking. Yes, very good question. Is it politician Laura Ann?
Right.
Very good question. So a debate, a controversial issue, a contentious issue at the moment, very fine line between verification and audit. What I'm gonna put the bottom half of your question in a floodlight. That's the important part. That she's asking, when does the difference become relevant? I think that's an excellent question. It becomes relevant when they are conducting an audit. There is a very strict and mandatory process they need to follow. They must issue a notice of audit under Section 40, and they must, during the audit, and this is important, give you progress reports. Thirdly, they must then issue with a letter of audit findings. So what's happening in practice is they're not issuing the progress reports, which means, and there's case law to this effect, you can get invalidate the subsequent assessment and set it aside. Often they issued the additional assessment, but they failed to issue the Section 42 letter of audit findings, again leading to the invalidation of this, which could lead to the invalidation of the assessment. It should. It's not automatic. You have to take action to do so, but it is a procedural non-compliance that is fatal to the additional assessment that they endeavored to issue or have issued. Whereas, Laura Ann, when it's a verification, they don't have to follow those procedures, right? But what often happens from a practical point of view is you'll see on the actual e-filing when you start scratching around that, and we then take screenshots, that it is with the audit department, or it was audit outcome, or from audit where the question was asked. We screenshot that, we screen grab that, we use that to say this was in fact an audit, and then you failed to follow proper procedures. But if it's a verification, they don't have to follow those procedures. So once it's an audit, you need to be aware of the taxpayer's rights and you need to know how to enforce them. Typically, how would you enforce them? You'd write a letter to SARS. We call it a Section 11.4 notice. And you tell them, guys, you failed to follow Section 40 and 42, which means this entire audit should be invalidated. Please withdraw it. If they don't, and you file your objection to that subsequent and pursuant additional assessment, then you raise non-compliance with 40 and 42 as a first point and a first ground of appeal, of objection. We call it a point in limine. And that often causes the assessment to then be adjusted to 0 because they know they're wrong. And again, there's reported case law to this effect. So use it, certainly use it, put it as a bullet in your chamber, and make sure you keep an eye on that. I hope that helps.
Nice to see you again, Willem. And Skalk, this was very, very informative on the legal side. Yes, we do follow the section numbers very carefully when we do, follow the process as tax practitioners. But I think you've added a lot more information to what we should be researching as well, and also that there is tax insurance that our clients can take. There are means to try and mitigate this risk. So I'm really grateful for, first of all, you as well, Willem, starting tax risk insurance. I think it's a commodity that's incredibly important for taxpayers to take. And Skalk, I think that your presentation was brilliant, and we would love to refer certain more complex works to you if there is no tax risk. Unfortunately, if there's no tax risk insurance taken up by the taxpayer. But we're certainly going to be going forward encouraging all our clients to take out this insurance They often think that because nothing's ever happened to them in the last 10 years or something, nothing's going to happen. But as you say, it's changed. The goalposts have definitely changed. So thank you very much, guys. Extremely informative. Thank you.
Thank you to
Monique.
you, Monique, for having us, and Jenna for setting this up, and the band crowd for listening to us, and Scott, thank you for taking some of your valuable time out to co-present us. We did enjoy it. Thank you very much. So give us a shout if you have any questions afterwards. We'll be happy to help. Thank you very much.
Thank you, guys. Thank you so much.
Thank you, guys. Thank you.